Hi guys, it's me Kenji from Tradveller again. So for today, if you are interested in learning quant trading or algo trading but not sure where to start or how to progress your learning, in this video I will roughly walk through with you what are the things that you can put your effort in order to learn quant trading, so you will have a clear understanding and pathway to follow on in your quant trading journey. So let's get started. Step 1. We got to understand the basic of trading first. The first step is to know about trading itself. It's crucial to understand the foundational concept before diving into the quantitative side, and let's break it down. First thing first is about buying long or selling short. Buying long means that you can buy a stock or an asset, in our case cryptocurrency or Bitcoin, and hoping its price will increase and then you sell it at a profit. And on the other side, selling short, you can sell a stock or asset, our case Bitcoin, when the price decreases, you are in profit. So in quant trading, we will usually involve in both the long and short directions. Hence, it is important to know them. Okay, next, we have position size calculations. This involves determining how much of your capital you should allocate to a particular trade. It's essential to balance risk and potential rewards. Positions calculations is crucial in quant trading as well. When it comes to optimizing for best return, we definitely want to allocate more fund in good earning strategy and lesser or no fund in a bad strategy or a losing strategy. The next point is the leverage calculations. Leverage allows you to control a large position with a small amount of money. It can amplify your gains but also your losses. Use it wisely. For example, with a 10:1 leverage, a 10% gain in the asset results in a 100% gain on your investment. But a 10% loss also means you lose all your capital. It's a double-edged sword. Leverage can be very powerful and hurtful if you do not apply correctly. Usually, we will not deploy high leverage for quant strategy as to avoid those sudden huge movements of price that might trigger liquidation before our strategy call for the exit. And next is about stop loss and take profit. These are some predetermined levels of price for you to exit your position in either a winning or losing results. I think we all know how important these two things are. Just something extra to mention is that in quant trading, usually we will have a specific exit condition for our trade. When that condition is true, position will be exited either in profit or in loss. Sometimes we do put in stop loss condition, but usually that might not be the case for factor-driven strategy. So this is some of the basic idea about trading. Understanding this basic will give you a solid foundation to build on. Now, let's move on to next step. Step 2. Developing mathematical and statistical skills. As the name mentioned, quantitative trading heavily relies on mathematics and statistics. You need to develop a strong understanding of these subjects to perform the necessary calculations and analysis. Let's break down what you should focus on. I will go through some of the important areas of maths to focus on, and by the end of this part, I will also highlight the important model or methods that you can put focus on more in order for you to start your quant trading analysis sooner. Okay, first thing first, the basic of mathematics. You got to learn about algebra. This will help you understand relationships between variables and how changes in one variable affect another. Next is calculus. It is essential for understanding change rates and modeling continuous data. Think about how stock price changes continuously. And next is about statistics. First thing first is about distributions. Knowing how data is spread out is crucial for making predictions. Common distribution in finance include the normal and log normal distributions. And the next thing is about statistical tests. These help you determine if your findings are significant or just by chance. And on top of that, we have regression analysis. It is used to identify relationships between variables. For example, how a stock return is related to market return. So all in all, these are the mathematical and statistical skills that are the backbone of quantitative trading. They allow you to analyze data effectively and build robust trading models. And while we are doing quant analysis, model or methods that we quite often rely on are calculations of average, calculation of standard deviation, calculation of percentile, determination of mean, max, median of data, and so on. You can start learning this model and start your quant analysis from here, because these are some of the model we quite often use and it's very sufficient for you to kickstart. And the next step in learning quant trading by yourself is learning programming. In learning programming, Python is the go-to language for quant traders. So why Python, you might ask? Because it is, first thing first, very easy to learn. Python has a simple syntax that's beginner friendly. You don't need a computer science degree to get started. And then in Python, it has a lot of powerful libraries. Libraries like NumPy, Pandas, and SciPy make data analysis a breeze. NumPy in particular handles numerical operations. Panda is great for data manipulation, and SciPy offers tools for advanced mathematical functions. And then in Python, there is a very good community support. There's a lot of users who is using Python, and there's plenty of resources available. You can find answer to almost any question you have. So when it comes to programming, you can start with the basics. Learn how to write and run Python code. Practice by working on small projects first, like analyzing historical stock data or calculating moving average, kind of very simple tasks. As you get comfortable, move on to more advanced topics like machine learning and algorithmic trading. So in particular, sometimes we're not moving into machine learning so soon. And Python makes it easy to build and test your trading model. Or you know what? Actually, you may start your quant analysis with Microsoft Excel. Yes, that Microsoft Excel we're all using. In fact, it is a very useful and powerful tool that can generate tremendous results. I personally developed a lot of strategy by just using Microsoft Excel. The only drawback with Microsoft Excel is that when the data set gets large, the speed of calculation will be much slower compared to using Python. But still, it can get the work done. So the next step in learning quant trading by yourself is that adopting the quant trading mindset. This is something very important in quant trading, which is the quant trading mindset. It's very important to understand the unique approach and root path of quantitative trading. Here are some key points. First, in quantitative trading, we are data-driven decision making. Unlike traditional trading, quant trading relies on data and algorithmic to make decisions. You need to trust the data and your models. This means rigorously testing your strategy and not making decisions based on gut feelings or emotion. And then continuous learning and adaptations. This step is very crucial in learning quant trading as well. You see, the financial markets are always evolving. We got to stay curious, keep learning, and be ready to adapt to our strategies and what the market is evolving. What works today might not be working tomorrow anymore. So it's important to continuously update our knowledge and tool regarding the markets. The next point is risk management. Effective risk management is crucial. Always have a plan of managing losses and protecting your capital. You may use techniques like diversification, hedging, and setting strict stop-loss level to mitigate risk. Understanding and adopting this mindset will set you on the right path to becoming a successful quant trader. It's not just about having the right tools, but also about thinking like a quant trader. So this is very important. Now we come to step 5. This is something most important out of all is hands-on quantitative analysis. We come to the fun part. Hands-on quantitative analysis, this is where you start applying what you learn and develop your trading strategy. Here's how you get started. First thing first, you collect data, and then you get the historical market data, source including like financial website, Yahoo Finance, or maybe certain broker kind of API, and sometimes direct download from stock exchange. So you need clean, reliable data to work with. After you got the data already, you can start analyze the data. Use your mathematical and statistical skill to analyze the data, look for patterns, trends or anomalies. For example, you might find that certain stocks tends to rise after a specific event or during certain times of the year. So you can start to play around with this kind of mindset here. And next, you can start develop your trading strategies. Start with some simple strategies like moving average or maybe momentum trading. Test and refine them using best testing. As you gain confidence, you can experiment with more complex models like mean reversion, or maybe if you are already good with it, you can involve with some machine learning algorithm to help you find what is the anomaly in the market. You got to keep practicing and refining your skill here. The more you analyze and test, the better you become at developing profitable strategies. It is in fact a continuous process of learning and improvement in quant trading. And since we talk about continuous process of learning and improvement, continuous learning is the key. As we know, the financial markets are dynamics and there's always something new to learn. So in order to keep update ourselves with what the market is happening or what quant trading this realm is, what is the latest happening, what we can do is we can read books and articles. There are countless of books and articles on trading, finance and quantitative analysis. Make it a habit to read regularly. Some of the books that I recommend include A Random Walk Down Wall Street by Burton McHale and Quantitative Trading by Ernest P. Chan. The other way you can gain more information and knowledge is watch YouTube's video and online courses. There's a wealth of free information available, like our channel, The Tradveller. We offer valuable insight and tutorial as well. Always be on the lookout for new content that can expand your knowledge in trading and quant trading. And next, this is something very powerful that you might miss out, which is joining a community that is focusing on trading or quant trading. Engage with other traders, join forums, attend webinars, and participate in online communities. Networking with like-minded individuals can accelerate your trading and your learning. Remember, the fastest improvement often comes from these encounters. Sharing ideas, getting feedback, and learning from others' experience can be incredibly valuable. I personally learned quant trading by myself initially, but my huge improvement come after I joined community in Tradveller and have discussion with other quant traders over here. I would say this process speed up my learning like at least 5 times faster, So if you have not started your quant trading journey, you can have a good idea on how to start from this video of all the points I shared with you. Or you may join our platform, the Tradveller, where we provide comprehensive quant trading program and community for you to embark your quant trading journey. It's good to have you with me in these sessions, and I hope to see you in our next video. Bye.